Hey, good evening, everyone. Your realtor Angela Slamelli here with Exit Realty Consultants coming to you tonight with the market update of what is going on in real estate. And I must say, lots has been going on, yet little impact has it shown. Economists are more optimistic about the U.S. economy, lowering the probability of a recession within the next year from 54% to 48%. This is the first time it's been below 50% since last year. While many may think that foreclosures are actually on a rise, here's reality. As you can see, foreclosure filings are inching back to pre-pandemic numbers, but they're still way lower than when the housing market crashed in '08. And today, the tremendous amount of equity American homeowners have in their homes can help people sell and avoid that foreclosure process. So we're definitely not there. Now, let's not ignore bankruptcies. Let's check out this graph as well. Bankruptcies during the pandemic didn't increase dramatically. However, the number of bankruptcies has slightly increased since last year, but it's almost back to 2021 levels. So, this is not the cause to alarm. The government's trillion of dollars in aid to individuals and business during the pandemic kept the numbers for 2021 and 2022 lower than the typical years. Remember all those funds going out? Well, the number of bankruptcies to date is still far below pre-pandemic levels, which is why the housing market is still not at risk of crashing. Bottom line is, right now, it's crucial to understand this data. Foreclosures and bankruptcies are rising, but these leading indicators aren't signaling trouble that would cause another crash as what we saw in the past. Now let's take a look at unemployment rate projections for the next 3 years. If over half of the experts no longer expect a recession within the next year, you might naturally think those same experts are also don't expect the unemployment rate to jump way up. And you'd be right. The graph below shows data from the same Wall Street Journal survey to show exactly what the economists project for the unemployment rate over the next 3 years. Now, check out this graph unemployment today versus 2008, financial crisis, and a 75-year average. As the orange bar in the graph shows, the average unemployment rate dating back to 1948 is 5.7%. The red bar shows the last time the housing market crashed in the immediate aftermath of 2008 financial crisis. The average unemployment rate was up 8.3%. Both of those bars are much higher than the unemployment rate today, shown in blue to the right. Moving forward, projections show the unemployment rate is likely to stay beneath a 75-year average, and that means we won't see a wave of foreclosures that would severely impact the housing market. Bottom line, most economists no longer expect a recession to occur in the next 12 months. That's why they also don't expect a dramatic rise in the unemployment rate that would lead to a rash of foreclosures and another housing market crash. Now let's look at this home price forecast for 2023 and 2024. Experts forecast home prices to end this year up at 2.8% and rise another 1.5% in 2024. That means prices are expected to continue climbing, and that makes buying a good home investment. This is one of my favorite graphs because it just doesn't give us one expert's prediction, but three. The Master of Business Administration, National Association of Realtors, and Fannie Mae. Now, let's dig in a little deeper with this. The Home Price Expectation Survey is a great resource to show what experts forecast for home prices over 5 years. It includes projections from over 100 economists, investment strategists, and housing market analysts. And the results from the latest quarterly release show home prices are expected to go up every year through 2027. If experts are correct, your home's value should rise by another 3.32% this year and another 2.17% next year. Experts predict that home prices will continue to rise across the country for years to come at a more normal pace, what I call a healthy market. And what does this mean for you? Well, let me give you an example. Let's say you bought a home for $400,000 at the beginning of this year. If you're factoring the forecast, you could potentially accumulate more than $71,000 in household wealth over the next 5 years. Bottom line, if you're someone who's worried about prices are going to fall, rest assured, a lot of experts say it's just the opposite. Naturally, home prices will continue to climb, not just next year, but for years to come. If you have any questions or concerns about what's next for home prices in your specific area, you know where to find me. And talk about recent news, check this out. The Federal Reserve will cut interest rates by 6 times in 2024 as the economy shows clear signs of cooling down. In conclusion, here are the results from Realtor.com. Q3 shows that the average down payment is a 14.7%. Median down payment, $30,400. And so that is your market update. I hope this information is helpful and brings some clarity to you all. Have an amazing evening. And as always, do not hesitate to reach out.